Hi there, welcome to Kneppy Invest and welcome to September 24, 2024. We have about 1 hour and 40 minutes left of training today. So I'm going to refresh this. Yes, I just want to confirm that today has been a really good day for mining. So resources up 2.54%, but I also noticed that XGO is down 0.23%. Now, the XGO is full of many mining companies, but also banks, financials, staples, and all these other companies. So I'm wondering if resources is up a fair bit, that must mean there's a fair bit of weakness in all the other sectors, or there are a few sectors down big. Now, we'll see if that sort of way of thought, that line of thinking is true in a second or so when we go through the best and worst performing sectors, indices, and also companies. Then we'll have a look at the top 5 stocks of the day, and a pretty solid top 5, I have to admit. And after I have looked at the top 5 stocks of the day, charts. I do have 2 charts lined up, and I might also include another company that, in fact, when I say another company, 2 of the companies that are in my top 5 stocks today did release their financial results, and another company also released their financial results, but this company is fairly small, not yet profitable, but I thought I'd have a look at the chart of that company instead of putting it into the top 5 stocks of the day. And then if I have any time, I'll also look at some of your comments. Okay, so let's get stuck into the ASX today. What has caused the XGO to be down when mining's had a really good day? Now, we can find this out by looking at the best and worst performing sectors. So materials up 2.42%. Energy's had a good day as well. So this is across the board. So materials, energy, more than likely uranium's had another good day. I think that's an almost certainty because I did have a look at the uranium sprott this morning, and it was up big. So I wouldn't be surprised to see many uranium companies on the best performing companies list. Real estate's had an okay day today. And 2 sectors had a really bad day. Financials and staples, both down by about 2%. I'm assuming, this could be a bad assumption, that Woolworths and Coles have had another bad day. The market doesn't like risk. When I say the market, I'm meaning investors don't like risk. So they do see a little bit of added risk when it comes to Woolworths and Coles because of the ACCC. So I wouldn't be surprised to see both of these companies down again, maybe 2%, or even more. So almost down 3% again today, Woolworths and Coles. In fact, if you have a look at the staples, the list of staples here, only one company is up, and that's A2 Milk, up 1.54%, although Cobram Estates down the below is up slightly. Okay, let's have a look at financials. Has it been a really bad day for banks? And is there an argument that we are seeing a rotation from the overvalued banks into the undervalued mining sector? So let's have a look. And yes, it's been a pretty bad day for banks. CBA down 2.5%, NAB down 3.2%, Westpac down 2.5%, and ANZ down 1.66%. Not as bad for Macquarie Group, but not a good day for banks at all. In fact, many of these financial companies are down fairly big. Anyway, so interesting day, another bifurcated day on the markets when one sector's done really well and a few other sectors have done fairly poorly. And there's probably an argument here in regards to diversification. This is why diversification could be a good thing because you sort of weed out, maybe not weed out, but you flatten that volatility or that bifurcation you see among the different sectors. Okay, so let's have a look at the best and worst performing companies today. Actually, no, before we do that, let's have a look at the XGO. Not the XGO, the ASX 20, down 0.54%. And this is, I think, where you're going to see that bifurcation. You're going to see some really good performance from the mining companies. So I wouldn't be surprised to see BHP, Fortescue, Rio Tinto at the top of the list, maybe up 3%. Oh, I don't think iron ore did that well today, but just based off the XTL down 0.61%, and knowing that the financials have had a really bad day, it must mean the mining companies, particularly BHP, Fortescue, Rio Tinto, have had a good day. Not only that, Woolworths and Coles have had a bad day as well. So let's have a look at the XJO, see if that is true. In fact, 13 companies down, 7 up. Anyway, so let's have a look. We already know the worst performing companies are the banks plus Woolworths. Wesfarmers not a good day as well. And will we see Rio Tinto, BHP, Fortescue at the top of the best performing companies in this list. Yes, there we go. Rio Tinto, BHP, Fortescue. In fact, Rio Tinto up 4%. Then we have Aristocrat Leisure, sort of related to one of my top 5 stocks of the day. So this is going to be interesting when we have a look at the performance of this other company. The very fact that Aristocrat Leisure is up 1.44%. Might have expected a little bit better than that, but however, and not surprised to see Woodside and Goodman Group on this list as well, or either, whatever. Okay, so let's get to the top, not the top 5. Let's get to the best and worst performing companies on the ASX today. See if there's any surprises in this list. Now, more than likely, I won't change my top 5, but don't know, maybe I will. Okay, Cettire, best performing company on the ASX today. I actually am a little bit shocked here that the share price has rallied by this amount, but it is my top 5, so I will talk about why the share price has rallied in a second or so. I do think the market is significantly overreacting. Element 25, share price up 67%, pretty good turnover, and I have also included this company in my top 5 stocks today. So not surprising to see it doing well today. Otherwise, Clover Corporation. So 3 of the top 4 performing companies today on the ASX are in my top 5 stocks of the day. Clover Corporation did release their financial results. Share price up 22.3%. It must be something to do with their forward-looking or their guidance, or maybe any sort of update, trading update, because the underlying results, or maybe the underlying results were a little bit better than expected, but a fairly big drop in profit and revenue. So obviously has to do with any sort of guidance, or again, maybe the results were not as bad as expected. And other than that, that's it. So there's 2 other companies that I need to see here, or want to see, I'd love to see here. Maybe not in the top gainers, but there will be one in the top losers. Now, let's have a look by market cap. So there it is. So we do have uranium. Not surprising, uranium had a pretty good night, or last 24 hours. So Paladin up 9%, Boss Energy's on this list as well, Deep Yellow, Adriatic Metals. I am going to put this down because they did release some sort of update last night. Share price up 8.4%. And yeah, still some gold, uranium, and I completely missed Tuas, up 11.85%. This is company number 4. Now, this is also my top stock of the day. Tuas, they did release their financial results, and as you can see by the share price increase, the market liked it. In fact, I'm pretty sure it beat expectations. Okay, so there's one company that, Hum's had a pretty good day as well, up 5.8%. There's Webjet Group, up 10.6%, and yeah, no other surprises in this list. Now let's have a look at the worst performing companies, or the top losers. And I have a feeling we will see the last company in my top 5 stocks on this list. It's not Waratah Minerals. I might have a quick look at Waratah Minerals in the chart section of this video. They did release something today. Share price is down 28.26%. So we'll have a look at that company in a second or so. Other than that, there it is, Light & Wonder, down 15%. This is the company that is related to Aristocrat. So this was a negative announcement for Light & Wonder and a positive announcement for Aristocrat. But you can see the different reaction from the market. Light & Wonder down 15%, Aristocrat up 1%. This should also show us that the market hates risk. In fact, the market is fear is much more powerful than greed. The market absolutely hates risk, and that's why share price of Light & Wonder is down 15%, because this company has a slightly higher amount of risk in it. Anyway, and there's also an argument the market is significantly overreacting, and this can lead to opportunities. Amplia Therapeutics, the company, the stock of the day yesterday, down 11.77%. I would say that's just a bit of profit taking. And that's about it. Now let's have a look by market cap. Atlas Cettire, I am assuming that's gone ex-dividend. I could be completely mistaken. Yes, ex-dividend. We can move on. Usually that sort of company, when you do see a bit of a price movement, it's more likely some sort of ex-dividend or something like that. What if that's true for also Tabcorp? Should have a list of companies going ex-dividend. No, they have not gone ex-dividend. Anything else here? Appen, probably a bit of profit taking. Yesterday I mentioned AMA Group. They were 5.9 cents When I recorded the video yesterday, they must have bounced in the afternoon, and now they're down 6%, back down to 5.9 cents. Anyway, so let's move on. Nothing of note. There's Echo IQ. That company was fairly popular among certain, I was going to say segments of the viewers, but quite a few viewers did point out Echo IQ, that I should have a look at it. I did have a look. Anyway, so let's move on. And Vita Life Sciences there as well. Small turnover. Okay, let's move on to the top 5 stocks of the day. And we'll start off with Cettire, up 68%, 71%. Open at $1.60. High was $2.30. So if you bought at the open, you've had a pretty good day. So why is the company share price up? Now, all they released today was the annual report employment of non-executive director, initial director's interest notice, no price-sensitive announcements. So what has caused this rally? In fact, that was the thing I was questioning. So all I did was go to Capital Brief. Actually, what I did was Google it, and there was an AFR article, but I thought I'd just look at Capital Brief. Why not? And there was, here it is, Cettire shares surge on confirmed audit results, or audited results. Yes, the auditor, I think it's a pretty big auditor, if I remember correctly. Who was it? Now, they don't say it here, but that I can see. Anyway, so for some reason, it seems like the market was nervous that maybe the Cettire's results were not going to be ticked off by the auditor, and they were ticked off by the auditor. And I'm just a little bit shocked that the share price has rallied by 70%. Now, the other thing they mentioned in this article is the stock was one of the most shorted on the ASX, and that, or this could be some short covering. So let's have a look at short man. Just to say, Pilbara will be number 1. And Cettire was number 6, the 6th most shorted company on the ASX. So when some sort of good announcement is released, when a company is really shorted, that could lead to a really good rally in the share price, because all those shorts will start to cover their position. So there is a possibility that's happening with Cettire right now. It's not the sort of thing I would be rushing out and buying, just because the auditor has ticked off on their results. I've probably never seen this before when the market has reacted like this. And if you have a look at the chart, it is an actually interesting looking chart, but a lot of volatility here. And we just don't know. Maybe the, what's his name, Dean Mintz or Chris Mintz, whatever his name is, maybe with this rally of the share price, he'll sell more shares. But a lot of volatility with Cettire, and I could envisage the share price going up significantly from here, and also envisage share price dropping significantly from here as well. Okay, so that's Cettire. Coming in number 5, interesting day for the company, up 71%. Now let's turn our attention to Light and Wonder. I nearly missed this announcement, but then I saw the share price was down 18%. So update on Dragon Train litigation, released at 12:30 p.m. So 2 hours previously from when I'm recording this video, or when I'm speaking right now. So this was only released 2 hours ago. And this was in regards to some sort of stoush between Aristocrat and Light and Wonder. Now, Light and Wonder management, I'm pretty sure, is full of old Aristocrat employees. So they sort of moved on. Anyway, this is in regards to an order received from the company from the US District Court for the District of Nevada, granting Aristocrat a preliminary injunction relating to Light and Wonder's Dragon Train game. Now, Light and Wonder say they respectfully disagree with the judge's decision and will promptly file an appeal. They will continue to vigorously defend against Aristocrat's claims, including presenting their defenses to a jury at a trial. They also mentioned in the paragraph below, they just reaffirmed their guidance. So this is not going to affect the company's results, financial results. In fact, they also mentioned that our pre-ruling estimate of 2025 consolidated EBITDA for Dragon Train was less than 5% of the $1.4 billion. So is the market overreacting? And I think the answer to that is yes, of course. They are overreacting. So this could lead to opportunity. Market's overreacting. If you like this company and you think the company could be good value, this could be the time for you. Anyway, so let's have a look at the chart for both Light and Wonder And actually, I'm just going to see if Aristocrat released anything about this today. Now, there's a chance that a lot of the market doesn't know. No, nothing. So yeah, share price of Aristocrat is only up a little bit. You would think if the share price of Light and Wonder is down 18% and they're going to be negatively affected, then shouldn't Aristocrat Leisure be up? Maybe not a similar amount, but it should be up a little bit more than 1.75% because negative implications for Light and Wonder should be positive implications for Aristocrat. But that's not the way the market works. The market is way more fearful than they are greedy, and they hate risk. So there is a little bit of added risk to Light and Wonder, and that's why the share price is down today. Another way to see it is, or view it, is sell first, ask questions later, and possibly that's what's happening to Light and Wonder. So let's have a look at the charts for both of the companies. Light and Wonder. Oh, geez. In fact, there has been a bounce today. Share price was as low as $1 or $125. Now, I bought at $141.50 back in May. So the share price is hovering around where I bought. But I think this is, and I think it was definitely no reaction from the market. Let's have a look at the 1 minute chart. Yeah, it just selling. As soon as this announcement was released, and the low was at 110. So around about 40 minutes after they released the announcement, and the share price has bounced. I think the selling has come to an end. And I think, let's go back. I'm just going to have a look. 136. Oh, there's been a little bit of selling since then. Share price has dipped in the last 20 minutes. Share price has dipped. So maybe we are seeing another round of selling right now. But again, I think this is an overreaction from the market. Even if this affects Light and Wonder for the next few years, it won't significantly affect their financials at all to justify a decrease of 18%. And Aristocrat, by the way, apart from today, the chart for Aristocrat, for Light and Wonder does look good, just like Aristocrat. Chart for Aristocrat, it's been looking good for a while. I do know some people will refuse to invest in these sort of companies. That's their choice. I'm not going to blame anyone for refusing to buy into these type of companies. Just like if anyone wants to invest in these type of companies, yeah. In fact, I do and have invested in both of these companies. Yes, I am a shareholder of both companies. Anyway, Aristocrat's chart looks pretty good. In fact, the share price broke out or moved into a new uptrend back in March 2023. So we're talking about 18 months ago. And you could have bought at $36. Share price hasn't quite doubled since then. But just put it this way. You could buy this company with a P/E ratio of 24.5 or buy CBA at a P/E ratio of 24.5. Which company is going to grow significantly in the next 5 years? It's not CBA. It's this company. I'm just putting that out there. Anyway, so that's Aristocrat coming in at number, that's Light and Wonder coming in at number 4. Now to a company I don't know much about, Element 25. Element 25. Element 25. What's it called? The periodic table. Manganese. There we go. I was going to say I don't know Element 25. Manganese. There we go. So does that tell us what Element 25 mines? Anyway, the company share price is up 53.49%. Share price was a high of 48 cents. So we have seen a bit of selling today. In fact, if you bought at the high, the share price has pulled back about 33%. And this is what happens when you do try to trade these highly volatile companies on these sort of announcements. You can lose a fair bit of money in one day or in intraday trading, or you could make a lot of money. Anyway, Element 25 HPMSM project selected for US $166 million Department of Energy grant. For some reason, I thought it was Department of Defense, but Department of Energy grant. I did actually have a look at this, high purity manganese. There we go. I don't know much about manganese, don't know much about high purity. Is this a critical metal? I would assume it is, just based off the very fact that US Department of Energy is willing to give a $166 million grant. It's interesting, they say this company, Element 25, has been selected for award negotiations for a $166 million grant from the DOE under the Battery Materials Processing Grant Program. The funding will support the construction of its proposed battery-grade high-purity manganese sulfate monohydrate facility in Louisiana. The grant award is in addition to the $115 million already committed by offtake partners GM and Stellantis. The only question I had was selected for award negotiations. Does that mean award negotiations that they have not been given this grant yet, but they have to negotiate for it? I'm not sure what that exactly means. Anyway, so the market likes this announcement, although there has been a little bit of selling. So let's have a look. In fact, what's the market cap of this company first? So it's only $75 million. So they're getting all this awards, all this money, but the market cap of the company is only $75 million. I'm a little bit surprised by that. So let's have a look at the chart. See if this is a bit of a breakout. I would not be surprised. And I have not had a look at this chart for quite a while. So I would not be surprised to see the share price or has been in a downtrend. And because, and the only reason I say that is because we have seen a bit of selling today. So I could be completely wrong, but I'm just guessing. Yep, there we go. All right, so share price been a really good downtrend until today. And the whole reason we've seen selling is because the share price has been a downtrend. And there are many shareholders underwater. They see the share price rallying today and they're going, now's my time to get out. So we have seen added pressure on the share price today. Enthusiasm of the sellers is overwhelming the enthusiasm of the buyers. Share price is down. Not only that, the share price is at the low of the day. So even though share price is up over 50%, this one-day candlestick is actually negative. And I would not be surprised to see more selling during today. So this is what can happen when you release a really good announcement, or maybe just a good announcement, but the share price has been a long-term downtrend. You won't see a likewise reaction if the share price is going sideways or if the share price is in an uptrend. So anyway, element 25. I want to see if I have this company on any of my watch lists. Nothing. So I'm going to put this into my high volume spec. There you go. So element 25, probably the first time I've ever talked about the company. And I've also learned that the 25th element is manganese. Hopefully I learned one thing a day, and that's my one thing today. Okay, so the companies coming in at number one and number two are two companies that released results today. I think three companies released results today. These are the two companies, and we have seen really positive reactions from both announcements. So the first one is Clover Corporation. Now, there is an argument this should be number one. Share price up 23% compared to Tuas, only up 11%. But Tuas is a little bit bigger, and the chart looks completely different. So we'll have a look at the chart for both companies in a second. Anyway, good reaction from Clover Corporation. Now we'll open up their market announcement. Yeah, we'll do that first. I want to see if there's a table in this one. I can't remember. No, so maybe it's in the Appendix 4E. Yeah, there is a bit of a table here. Just looking at revenue and profit. So down. So revenue down 22% to 62.2 million. Profit down to 76% to 1.5 million, or down 84%, or net profit. Yeah, net profit down 84% to $1.1 million. They actually are providing a dividend, looks like. Excuse me, just want to burp there. Anyway, so fairly negative results on the service here. So why is the share price higher? I actually don't know. In fact, I don't even think there's going to be anything in here about it. It's a fairly small company. So Clover Corporation, I'm assuming, has a market cap of 50 to 70 million. Let's see. 75, that's because the share price has rallied today. Yeah, 75 million. Share price is up. I'm just going to just see if there's been any articles written. I just want to see if the results beat expectations. News. Declares new dividend. Okay, that's not, well, I wouldn't necessarily say it's new. They've been issuing dividend. Oh, wait there, no. So it looks like they skipped one dividend. So the last time they issued a dividend was in October 2023. So it looks like they put a pause to dividend, or the interim dividend, and now they're providing their shareholders with a final dividend. That maybe is all it's taken for the market to get excited about Clover Corporation. Is just the dividend. It's really interesting. And Oh, here we go. Clover Corporation sees strong second half rebound. Okay, so we have a bit of a clue there that maybe the reason why the share price is running today is because of some sort of outlook performance or some sort of trading update from the company. So this is this half year results? For some reason, I was thinking these are full year results. No, it's full year results, but maybe they're suggesting, based off that announce or that article, that the second half results were pretty good. So let's have a look. Okay, and they do provide second half numbers here. Second half delivered a revenue of 34.9 million. First half was 27.3 million. So nice growth in revenue from the first half to second half, 28% increase, and profit of 2.1 million in the second half. In fact, they have a loss of 0.6 million in the first half. Improved performance in Melody Dairies under new management, and they also mention here the latter half of financial year 24 experienced improved demand driven by increased sales in China, New Zealand and Asia. Infant formula manufacturers recovered and customers have transitioned from trials to commercialization. Okay, so this is sounding quite positive. Definitely can understand why the market has liked these results and why the share price is rallying. Based on the company's underlying performance and cash position, directors have declared a fully franked dividend, final dividend of 0.75 cents per share. And looking ahead, nothing of note there. Okay, so a pretty good results, particularly the second half of the year for Clover Corporation. So even though the 4-year numbers look pretty bad, it's just that second half. It looks like the company is rebounding. And now let's have a look at the chart. Is this a time to get excited about Clover Corporation? Is the bottom in? I'm actually going to call it now. The bottom has been reached. Anyway, so this share price of this company has been a long-term downtrend. The company has disappointed, and we know that just by looking at the financial year 24 results. Numbers are down big, but maybe this is the turnaround for the company. Share price fell to 36 cents yesterday. Was that yesterday? Yeah. So the last 3 trading days, share price has been at the low, 36 cents. So this seems like a bit of a surprise to the market. Now, probably my only concern is the share price has been a downtrend. And there's going to be resistance. So even though the company has released good results, particularly the second half, looks like they're turning things around, there will be shareholders who just want to or need to get out of this company. So we will possibly see a bit of resistance to the share price moving higher. We haven't seen it today. Share price has remained strong at 45 cents, but definitely there will be a lot of pain, maybe not pain, but there will be a lot of resistance moving forward for Clover Corporation. But this could be the turnaround for the company. Pretty good volume coming in. Not only that, really good volume coming in the last few weeks, increasing volume. That's interesting in itself. I don't mind this one. I'm going to put this onto one of my watch lists. Just follow it a little bit more closely from now on. Now on to Tuas. And should I tell my story about Tuas? What happened was it last week? Could have been last week, yeah. Maybe it was last week. I forget exactly what happened. So I went to sell I was trading Tuas. I went to sell my Tuas shares. And instead of selling, I bought more. So I had, 800 shares? So instead of selling 800 shares, I bought 800 more. And then the next day, in fact, I can tell you exactly when I did this. So I did it the 18th. So that was last Wednesday. I did it on the Thursday. So I sold it at I meant to sell it at a certain price, but instead of selling it at a certain price, I forgot what price that was. I bought at $4.08 when it opened on the 19th. And the reason why I bought at that price, because I would have put it in the market, a limit order, thinking I wanted to sell, and it would have been like $4.20. So if the share price got to $4.20, I was going to sell. But instead of $4.20, I bought at $4.08 because when you're buying compared to when you're selling, if you put a market or limit order in, $4.08, yeah, makes sense. Instead of buying at $4.20, $4.08, yes, definitely. Anyway, so I decided to sell that group of shares the next day at 12% profit? Yes. And I also decided to keep my original 800 shares instead of selling it. So I decided my original decision was absolutely wrong. And I'm happy now. Share price up 11%. Anyway, so I still don't know why I decided to sell Tuas. Anyway, we'll have a look at the chart in a second. But first, the results, financial results for Tuas. And probably the most important thing, this company is not yet profitable, but they're moving in the right direction. That's the most important thing. In fact, I think I'm gonna have to open up the presentation. Not a very long presentation, 12 pages. A lot of times when a company releases their results, they release presentations, and sometimes the presentation can be 100 pages, 200 pages long. This is not for Tuas. And this is all you need to look at for Tuas. So they're sort of like, the way I describe Tuas, TPG, but in Singapore. Anyway, look at revenue. Nice increase in revenue. In fact, revenue has doubled over the past 2 years from 57 million to 117 million. Exactly what I want to see. EBITDA has gone from 15 million to 50 million. So it's tripled in 2 years. Company's not yet profitable, but it's gone from negative 27 million to negative 4. And I'm pretty sure they mentioned they expect to be profitable in financial year 25. Now, I'm not the biggest fan of EBITDA because obviously this company is or has a lot of depreciation and amortization. Probably not interest, but I'd say a lot of depreciation and amortization. In fact, if you have a look at the results, I would assume this company spends a lot on capital expenditure. In fact, you probably don't have to look at the results. It's probably in here somewhere. Here we go. Acquisition of plant and equipment, 45.8 million in the past year. So eventually that will go to depreciation, amortization, which is why this company has a really high EBITDA, but a low profit. Now, I'm pretty sure positive cash flow milestone achieved for financial year 24. Yes, the company was operating cash flow and free cash flow positive for the year, but I'm pretty sure they did mention, here we go, targeting to achieve 4-year positive profit or NPAT. And I'm assuming they will do it. They're maintaining a high capital expenditure between 45 and 55 million. And I think a lot of that is for future growth. Okay, so we got that. Oh, the other important thing here, the results beat expectations. I wasn't sure about this. And then I did see this article somewhere. Maybe it's not in this one. No, I'm pretty sure there was an article somewhere, and I thought it was, here we go. This is in Capital Brief again. Tuas shares jump after encouraging 4-year results. And they actually do mention in this article that there was some sort of comment from someone. Oh, here it is. No, that's not it. There was some sort of comparison to expectations, and I'm not seeing it. Here it is. No, it's at the bottom here. What they said. So this would have been from City Analysis. There is a lot to like and unpack here with 5.5% revenue beat and 13% EBITDA beat. So these results were better than expected. Hence the share price up 11%. And they also mentioned with clear trajectory to positive NPAT, which is what Tuas is targeting for financial year 25. Okay, now potentially I should not even be thinking about selling my shares in this company. Now, the price I was looking for today was $4.80. If the share price of Tuas can close above $4.80, that would be an all-time high for this company. Now, I still don't know why I wanted to sell, because the obvious sell price for this company is about $4 or below that. And the share price got to $4.08. I'm just fortunate that I bought on the low. Anyway, so it's looking pretty good for Tuas. Nice result, beat expectations. Share price is up. I'd just like to see the share price get to $4.80 and move higher from there. It did get to $4.80 today at some point and has pulled back. So there is a little bit of resistance at these current levels for Tuas. So good day for this company. Okay, so that is the top 5 stocks of the day. Now let's have a look at a few charts. I do have a few charts lined up. We'll start off with WTM. Now, WTM did release an announcement today, and the share price is down 29.35%. Spur project drilling update. So obviously the market hasn't liked that. Didn't like what they saw or read in the Spur project drilling update. Share price has pulled back. Now, yesterday, share price rallied a fair bit. In fact, it was up 30%, Now it's down 30%. So share price, unfortunately, has, in fact, pretty big volume as well. Highest volume this company has seen since early July when the share price broke out. Now, the very fact that the share price is down on pretty high volume just tells me that, the market just didn't like what they read in this particular announcement. And maybe yesterday there was a bit of, maybe I wouldn't say loose lips, but don't know why the share price rallied yesterday. Share price is in an uptrend still. Now, I wouldn't say this is absolutely negative, but it's moving in that direction, particularly when I look at the volume. I don't like to see high volume when the share price has dropped like this after share price, with the share price in an uptrend. This could be the turning point when it comes to the trend and the sentiment for this company. Could be. Not an absolute, but could be. Adriatic Metals. This company also released something last night, a bit of a production update or something like that. Operations update presentation. I had a quick look at the presentation and wasn't much substance. So maybe the share price is rallying just because of silver and gold and that sort of thing. So let's have a look at the chart. And a lot of volatility here. And you could have bought shares in this company at 260 not that long ago. Yeah, not that long ago, like a month ago. Just over a month ago. Now share price is 358. I'm not the biggest fan of this particular chart because it's highly volatile. You just see, if you go back between March and late May, how little volatility there was. Share price was just going up, almost in a straight line. Now it's just all over the place. Volatility, day traders love volatility. So I wouldn't be surprised to see quite a few day traders in Adriatic Metals right now. Company called Global Health. Got to write it down first. Global Health. This company also released their results today. This is a fairly small company. I would assume it has a markup of 15 million. I'm going to say 15 million. $8 million, well off. Double. I was double the markup of this company. There you go. Just shows you I don't really follow this company all too closely. 4-year results summary, 4-year statutory accounts. This company's not yet profitable. In fact, this company's been around a long time. I still remember first looking at this company probably over 10 years ago, and it really hasn't done anything over a 10-year period. Anyway, positive EBITDA with an R at the end. So earnings before interest, taxation, depreciation, amortization, and what's the R? Research. They should put some sort of definition of EBITDA. Well, they do talk about. Anyway, doesn't really matter. The company's not profitable. In fact, revenue has been climbing over the last 5 years from 2.9 to 4.6 million. So it's fairly slow increase in revenue, but it's slowly increasing. Suppose that has it going for it. I'm just going to have a quick look at this. And you could be able to see the last 10 years for this company. So this company's been around for a while, and it just hasn't. Just take your time. No need to rush. Well, I suppose, it hasn't. It's doubled its revenue over the last 10 years from 4 million to 8.7 million. So it's increased. That's doubled, but it's still fairly low. I'd like to see a better increase than that. But and if you look at the operating income, we look at the net income. It's I think, and I can't remember this. This company was profitable back in 2015-17. And maybe that's why I looked at this company, because it was profitable, but it has had a loss every year since then. So even though revenue has been climbing, losses they haven't reached profitability just yet. And if you have a look at the chart for Global Health, nothing much to see here. If you have a look at the weekly chart, there was a bit of interest in this company. I wasn't thinking 2021. Yeah, there was a bit of interest in 2013-14. So obviously that is when I first had a look at this company. Share price reached 76 cents and then pulled all the way back to like 12 cents. Went back up to 76 cents in 2021 and pulled all the way back to 14 cents. So maybe now is the time to think about buying this company. Maybe history is repeating, just like we saw in 2020 into 2021. Some good volume came in not long ago, back in July. Anyway. And 2 other charts I just want to look at. First one was Index. No, Internal Diagnostics. Index is IMX, I think. Why have I included internal diagnostics in this chart? So this is, I took a position in this company and the share price is going sideways. And I was like, oh, just be patient. Just be patient. I think there's a chance the share price will break out. Possibly yesterday, the share price has broken out. I wanted to see share price get above 270. It did it yesterday. So this is a case of me being patient. Sometimes I'm really impatient, but I'm just thankful that I went, no, I'm just going to wait to see what happens with internal diagnostics. And it looks like there is a potential breakout for this company. They are acquiring Capital Health, if I remember correctly. And Nanosonics, this one's looking interesting. This is another company I own. And is Nanosonics moving into an uptrend? That is a question I asked myself last night when I looked at this chart. Is the share price moving into an uptrend? I think there's an argument. There is a possibility it is. And I think maybe the badness is over for this company. The badness, yeah. Let's have a look at some of your comments. Nirvana says, thank you for the video, Kneppy. Could you please analyze PointsBet and corporate travel chart? I can do that for you. Now, PointsBet is interesting because they've given capital return to their shareholders a couple of times in the past. That's why the share price or the chart looks like this. See, two massive drops in share price. September last year, April this year, share price is rallying. I do like to adjust this chart to take into account those capital returns, and you get a whole different feel. This chart looks really good. Even if you don't adjust it, you can definitely see a bit of a positive reaction from the market in the past month. The share price looks like it's trying to turn up. I do like this chart for PointsBet, particularly when you adjust it for the dividends. The other thing I like, the volume. It's always the volume. Look at the volume. The volume has increased. Not only that, I'm pretty sure a couple of people on the Oz Business Call have spoken positively about PointsBet. Now, I've not had a look at this company's financial results, so the share price could be moving on financial results, maybe a better than expected outlook or a better than expected trading update, that sort of thing. But the chart looks pretty good at this point in time. On the flip side, corporate travel management, not so much goodness here. Share price in a well-defined downtrend. That's all we have to know. In fact, when they released their last results, share price did drop. Oh, it didn't drop that much. Oh, that's a green candlestick, that's why. But then the next day, share price did drop 7.42%. But the share price is downtrend. I am a shareholder of this company. And I think the main question you should have for corporate travel management, is this a high quality company? And that's a legitimate question. And then the second question, is there value in this company at current prices? And I can't answer that for you. You have to find this out for yourself. Now, just technically, still looking pretty weak. Now, just possibly, the bottom has been reached, but I can't really confirm that just yet. Maybe the bottom is around about $11.20. Anyway, so it remains to be seen if this is the bottom. But the share price today has rallied 3% and is getting towards the price level before they release their results. So maybe this is a bit of a bounce, maybe a dead cat bounce, but maybe the bottom has been reached. But at this point in time, not keen, technically keen, because the share price is still in a downtrend. But yeah, if I had to pick one of these two companies, I'd probably pick PointsBet. Adrian, thanks for the video as always, Michael. Any thoughts on Aussie Broadband and whether it's in breakout territory would be great. Yes, I can do that for you. Aussie Broadband. Of course, I always have to type in Aussie because there's a lot of ABBs out there. Anyway, Aussie Broadband. This is fairly similar than Nanosonics. Now, I'm a shareholder of this company, and I do like opportunities. I would say I'm opportunistic sometimes. And when they did release that false profit downgrade, still can't believe there were some experts calling it a profit downgrade when it wasn't. When they did release that back in mid-July, I took advantage and bought some shares at $3, near the low. And the share price has increased 20%. Yep, 20% since then. And the share price looks like it's wanting to move into an uptrend. The market also reacted positively on their financial results. I'm pretty sure that was on the 26th of August, up 11.9%. And there was a nice little pullback, and then the share price rallied again. This is a nice looking chart for Aussie Broadband. Now, at these prices, the share price is not quite at a 6-month high. I do prefer 6-month high over 3-month high. When you talking longer time periods, there's less likely to be resistance. So if you're talking about a 1-year high, lower resistance than a 6-month high, which has lower resistance than a 3-month high, but a 2-year high, lower resistance than a 1-year high, 5-year high, much lower resistance than a 1-year high. Anyway, so it's trending in the right direction for Aussie Broadband. That's all I can say. It's looking nice. I'm not nervous as a shareholder at all. Thank you, Adrienne. Is it in breakout territory? So my definition of breakout is positive financial news. My perfect definition. No, my definition for the perfect breakout. Now, I also will see and trade imperfect breakouts, but my perfect breakout is positive financial news, high volume, and share price at least a 3-month high. Now, I do prefer 6-month high. That used to be my rule, 6-month high. I've slightly adjusted it to 3-month high, but I do prefer the 6-month high. So technically, when they did release their positive financial results, it was not a breakout or my perfect breakout because the share price was at a 2-month high. But the share price has rallied since then. So we are getting to the point where it is a breakout, even though we are getting a little bit time removed from the financial results. But we have seen a positive reaction from the market over that month. That's a good sign moving forward for Aussie Broadband. So I do like this chart for the company. Even though I wouldn't necessarily call it a breakout, I do like the chart. Jazz and Tails, thoughts on Joyce Corporation? Attractive dividend. I bought a few years ago. Long, slow term uptrend. Yes, keep daily rundown videos. I will. This is definitely a company I first looked at Joyce, would have been well over 10 years ago. And maybe I'm kicking myself for not buying. Yes. And so share price would have been like at 40 cents. Now the share price is nearly $4, a nice 10-bagger over a 10-year period. And yeah, this is a nice chart. So the weekly chart looks pretty good. The only time it looked bad was during the COVID-19 financial panic, but that's okay. A little bit of volatility. I think the market's not sure how to deal with this company when it comes to what they sell. I'm trying to remember what they sell. I haven't looked at this company for a long time. Joyce. For some reason, I was thinking kitchens and stuff like that. Yeah, retail kitchen and wardrobe showrooms, retail bedding franchise operations, and retail bedding stores. Yeah, for some reason, I just think kitchens when it comes to this company. So a little bit more than that. Overall, weekly chart, 3 down weeks in a row. Still looks pretty good for a longer-term uptrend. Let's have a look at the daily chart. Nothing to complain, even with the daily chart. The other thing to notice here, when you look at the daily chart, is the volume. So between about March and August, September, there was no volume. Share price was just drifting higher. But between October and March, October last year, March this year, there was a lot of volume at these lower prices. And I would say that's just a fund manager taking position, or a few fund managers taking position in this company. And that's what I'm going to talk about when it comes to Joyce Corporation. I like the chart. No complaints about the chart. What's a dividend yield? Dividend. Well, according to ComSec, the dividend yield is 5.8%. Don't always believe that. So 11 cents and about 16 cents. So about 30 cents. The dividend yield is more than 5.8% in my opinion. Maybe we can just have a look at market index. Oh, no, you know what I'll do? I'm going to have a look at this. What's this site called again? FinChat. Joyce Corporation. We're going to have a look at some of the financials, the overview of this company. So, Mark, that's not right. Oh, it didn't update before I changed. I was going to say the market cap of Joyce is not 7 million. A market cap behind 118 million. Gross margins 53.73%. That's pretty nice. Return on equity 18.6. Return on invested capital 23.6. That's pretty nice. That's a 5-year average. Exactly what I want to see for a company. P/E ratio 13.3. It's not too extreme. I'm looking at some of the other valuation metrics here. Not too stretched. Price to free cash flow, 6.2. Revenue growth, really nice over the last 3, 5, and 10 years. Dividend yield is 5.75%. So obviously, CommSec was not wrong. So I was wrong. And dividend growth over the last 10 years, 20.4%. This is a nice company. Owns 4 bedshed retail stores. Oh, I do like this company overview. Retails kitchen and wardrobe projects or products in Australia. Founded in 1886, been around a long time. And the other thing I just want to look at, we already know it's increased their revenue nicely over the last 10 years. And this is a nice revenue growth for Joyce. There's nothing else to say. It looks nice. Rick Thellian says, Loomis took over main imaging company sometime back. Thank you for that information. Amazing World Video. I like to see your amazing videos, Mr. World, Amazing World Video. Thank you for great videos always. Appendix is back above $2. Can you please share your thoughts in next video, please? Wow, this is the next video. So let's have a look at Appen. I did know share price was down back below $2. And let's just verify that in CommSec. Up-to-date information, $1.98. I will be honest, I have no, personally, this is just me personally, I have no desire to even think about buying Appen. The market cap of this company must be heading towards 500 million, which is outrageous for the company that is or has been in structural decline. And whether they can turn things around, I think is still up in the air. Market cap is 437 million. So still a lot of questions I have about this company. And the very fact the share price has run up a lot. Share price has increased 5-fold since late July. So over a 2.5, almost 3-month period, no, 2-month period, share price has increased 5-fold. Whenever you see that, share price eventually will pull back. And again, I do think this is a bit of a plaything for day traders. Just look at the volume, sustained volume the last 2 months. And before that, no one was interested. Decreased volume, very low volume. And I think that's probably day traders. So wouldn't be surprised to see, just like Cettire, share price pull back significantly. And it wouldn't surprise me to see share price keep on running. I just don't know. So that's my opinion on Appen. But if someone was trading this, I could understand it. You've probably done fairly well out of Appen if you've been trading it over the last 2 months. You've probably done fairly well. And yeah, there was a nice little breakout on the 30th of July. That would have been that Penny's 4C. That was a nice little buying position. Up 55.8% on that one day. Anyway. So it's Appen. Nice, 00742. The deal leaves Helios as a pure play pathology provider. So it becomes more comparable to Australian Clinical Labs, less comparable to Sonic. Thank you for that clarification. Landy Lee, what are my thoughts on Ventia? And, okay. I was trying to get through all your comments. I think maybe I can. My thoughts on Ventia. I am a shareholder of this company. Hopefully that's it. That's all you have to know. I am a shareholder of this company. And the chart is beautiful. I bought Ventia, I can't remember when. So quite a while ago. It was a few years ago I bought Ventia. I'm not sure. Now, when I bought it, the P ratio was like 10. And I thought there was good value in this company. The P ratio, I think, according to TradingView, it's 19.28. Dividend yield is 5.5. Chart looks beautiful. Really interesting reaction when they released results. I'm not sure what the market was thinking, but the share price has gone back up to almost the all-time highs. I do like this company, but I think valuation again. I'm not sure you could say this is a high-quality company yet. I was very happy buying this company when a PE ratio was 10, or maybe it was 11, I forget. Would I buy this company right now, or would I add to my decision? Maybe not, because PE ratio is a little bit higher, and so I don't see as much value right now. But the chart looks really good. No complaints about the chart. So that's Ventia. Philip says, Worker cap raise just recently at 25.5 cents, yet share price doubled. What's that? What's happening here? Worker, I'm assuming you mean this company here. Worker. The chart looks really good. I talked about this the other day. Chart looks really good. No complaints about this chart and the volume. We've got the share price in the movement moving higher, and the chart and the volume looks really good. Really high volume coming in the last month and a bit. You talked about capital raising. Yeah. Sometimes. So when did they do the capital raising? They did the capital raising late August. And the share price has taken off. Yeah, you're right. Share price has taken off. Maybe the market was concerned about the level of cash this company had, and maybe this has alleviated those concerns. I don't know. But when you look at the chart, look at the volume, things to like when it comes to Worker. So I won't question what the market is doing when it comes to this company. So they did the capital raising at 2.5 cents. Yeah, it's doubled, hasn't it? So for some reason, the market just doesn't care. So sometimes that happens when a company does a capital raising, the share price then rallies. And I think that just has to do with concerns or fear. So again, the market doesn't like risk. So it decreases the risk of a company, and the market doesn't like risk. So maybe that's what's happening with Worker. Decreased risk. Ooh, I like the futures or potential future of this company. I'm going to buy some shares. So that's Worker. And the last one, saw NTH mentioned today and jumped on, or MTH. MTH, since your video, is up 240% and I'm up 30%. You now have full control of my portfolio. Don't say that. No, don't. I will not have any control of anyone's portfolio. You need to have full control over your own portfolio. The whole point of me doing these videos is to share ideas with you. And then you can do whatever you want with those ideas. And it seems like you have done well on the back of my idea, but you made the decision. You yourself made the decision, ALIB at 6936. And just to go further on this train of thought, I have not bought into Mithril Silver and Gold. So even though I saw it rallying really nice, I did not take a position. And that's just me. And I'm becoming a little bit more risk averse. And Mithril Silver and Gold is Explorer, so I'm trying to stay out of exploring companies. I have dabbled in them in the past, but I'm trying to stay out right now. But well done if you have taken position in Mithril Silver and Gold. What's the share price done today? Well, it's pulled back. Not surprising. So pull back 13.64%. This should not be a surprise. When you see the share price of a company run up like this, just accelerate. You are going to see a pullback. If you don't see a pullback after the 2-day share price action from Mithril, that means there's really a lot of strength, because you're going to see a lot of buying coming, or a lot of selling coming in. But if that selling is met by buying, that's a really powerful signal. So even though the share price has pulled back, that's not necessarily a bad thing, because it was eventually going to happen. Well, I just don't know which way the share price is going to go from here. It could really rally a lot from here. It could rally to $1, $2. It could fall all the way back down to 20 cents. I just don't know. And that's one of the reasons why I stay out of these sort of trades. I just don't know sometimes which way the share price is going to trade. And I think that's why day traders love volatility, because they're more short-term focused. They'll more likely be looking at, say, 1-minute charts. So if I was looking at the 1-minute chart, I'd be a little bit more negative about Mithril right now, starting to turn a little bit negative just on the 1-minute chart. But maybe some of them look at 5-minute charts. If they're looking at 5-minute charts, nothing negative yet with Mithril. So looking at maybe 15-minute charts. Well, still looking pretty good. Of course, if they're looking at 1-hour charts, still looking pretty good. So I think it all depends on what you're looking at and what your rules are, that sort of thing. And we all have technical chartists, all have different rules. Even day traders, they all have different rules. That's why it's really unique, because it's so broad, technical analysis. Again, don't listen to people like Andrew Page, who said, well, if technical analysis works and everyone will be doing it and then it wouldn't work. That's a fairly naive way of thought, because technical analysis is so broad that you could do something that no one else is doing and be successful doing that. And then you could do that successfully for 5-10 years, and no one else would do that sort of way over that 5 or 10 year period. Okay, so that's all I got for today's video. Went through some of your comments and questions. Anyway, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.